Welcome to the Deep Dive, where we cut through the noise to bring you the essential insights on the topics shaping our world. Today, we're jumping straight into a pretty high stakes scenario. It's playing out in boardrooms everywhere, really. Artificial intelligence is fundamentally reshaping industries, forcing even, established giants to redefine their future. It's not just evolution, it's a dramatic reinvention. And speaking of giants, our focus today is Adobe Inc., a name practically synonymous with creativity, with digital experiences. The sources we've analyzed paint a vivid picture of Adobe at what's been called a critical inflection point. We've dissected an in-depth report scrutinizing its strategic moves, financial health, and the really cutthroat competitive landscape as it navigates the AI gauntlet. Our mission for you, our listener, is to extract the most important nuggets, uncover some surprising facts, and help you truly understand what this profound shift means for Adobe, for its millions of users, and yeah, for the broader tech world. We're going to explore where Adobe sees its biggest opportunities and, crucially, where it faces its greatest vulnerabilities in this exhilarating new era. So let's dive right in. The report describes Adobe's all-in pivot to AI as both its most significant opportunity for re-accelerated growth and its greatest vulnerability. Uh, that sounds like quite a tightrope walk. What does that dichotomy actually mean for them, on the ground?
Yeah, and what's truly illuminating, I think, is that this isn't just strategic theory, right? It's not just on paper.
Mm-hmm.
Adobe is already translating that AI investment into, well, tangible financial results, actual money.
Okay.
Our analysis highlights two crucial metrics that provide concrete proof points. First, their AI-influenced annual recurring revenue, ARR they call it, has impressively surpassed $5 billion in Q3 FY25.
5 billion. Yeah.
And that's a substantial jump from $3.5 billion at the end of fiscal 2024.
Yeah.
So what this tells us is that AI features aren't just, attracting new users maybe. They're already enhancing the value of existing subscriptions.
Driving deeper engagement.
Exactly, within their current customer base. Second, and maybe even more telling for their future, is the AI-first ARR. This specifically captures revenue from entirely new AI add-ons and services, things built from scratch.
Right, not just bolted on.
Precisely.
Uh-huh.
It's already exceeded Adobe's full-year target of $250 million. And get this, it hit that milestone a quarter ahead of schedule.
A quarter early, that's fast.
It really is. This isn't just about boosting existing products. It's about validating their ability to create and, importantly, monetize entirely new AI-driven offerings. It suggests their gamble on these new AI services is paying off faster than, well, maybe even they anticipated.
That's a powerful validation, especially so early on. Now, the report frequently mentions Adobe's commercially safe Firefly platform. That phrase really sticks out. What exactly makes Firefly so safe, and why is that such a powerful differentiator, particularly in the current, often litigious AI landscape?
This raises an absolutely critical point, especially with all the, copyright concerns swirling around generative AI right now.
Huge issue.
It is. And Adobe has built a significant moat here. Their Firefly generative AI models are trained exclusively on licensed Adobe stock content and works that are firmly in the public domain. And this is key. They explicitly do not use customer content or indiscriminately scraped web data like some others might.
Okay, so it's curated data, controlled data.
Exactly. For enterprise customers, this translates into a truly compelling offering. Full intellectual property, IP indemnification.
Meaning Adobe takes the legal heat.
They essentially take the legal risk off the table. Think about it like this. For a major corporation, the risk of a multi-million-dollar copyright lawsuit from an AI-generated image used in an ad campaign, that's an unacceptable liability.
Absolutely.
Adobe is basically saying, we've got your back legally. This directly addresses a primary barrier to enterprise adoption of Gen AI, mitigating both legal and reputational risks. And we're already seeing major brands like Deloitte Digital, IBM, PepsiCo actively adopting it. So that validates the demand for this safe approach.
Oh, so they've got some strong early wins on the AI front, particularly with Firefly's safety angle. But it sounds like this tightrope walk isn't without its, swaying moments. The report also highlights some significant strategic challenges lurking beneath the surface, even with this early success.
Indeed. Yeah, while the AI pivot is showing promise, the competitive landscape has been radically reshaped, really radically. And Adobe is facing what amounts to a multi-front war. Two immediate challenges truly stand out. First, there's the Figma fallout, that failed $20 billion acquisition.
Right, that fell through.
Exactly. It left a permanent void in Adobe's product portfolio. They effectively just, Well, seeded the high-growth collaborative UI/UX design market.
UI/UX being user interface, user experience.
Correct. Figma now commands a dominant 36.8% market share. Adobe XD. It's stagnant at 10.4%. It's a huge gap in a really rapidly evolving design space.
Ouch. Okay, what's the second challenge?
Second, Adobe faces a swarm, as a report calls it, of nimble AI-native startups, particularly in image and video generation. These companies are continuously pushing the boundaries, risking the commoditization of Adobe's core creative functions, like the things Photoshop used to uniquely do.
Making those features table stakes.
Potentially, yeah. And then on the flip side, Canva continues to just dominate the lower end of the market,
Yeah.
catering to non-professional creators who want ease of use, quick results.
So they're getting squeezed.
Exactly. Squeeze from both ends. The cutting-edge AI and the mass market simplicity.
That's a lot of pressure from different directions. Let's shift gears a bit and look at how Adobe's core business is actually, put together. The report talks about 3 core clouds. How does AI weave its way into this established model that many of us are already familiar with?
Sure. So Adobe's business has long been built on these 3 robust cloud-based subscription platforms.
Yeah.
Digital media that covers Creative Cloud and Document Cloud, and then digital experience.
For the 3 pillars.
Exactly. And this model has been a huge success for them, providing really resilient, predictable, recurring revenue. The way AI is being integrated now, it really highlights how transformative this shift is for them. Digital media is their primary revenue engine, right? Pulled in $4.46 billion in Q3 FY25. This is where you find the powerhouses: Photoshop, Premiere Pro, Illustrator, Acrobat.
The flagships.
Definitely. Here, the AI strategy is largely about defending their incumbency and, frankly, increasing value. They're doing this by upselling existing users to higher-value AI-infused tiers like Creative Cloud Pro and introducing new direct AI services like the Acrobat AI Assistant. It's about making their indispensable tools even more indispensable.
Got it. And digital experience.
Then there's digital experience, generated $1.48 billion in Q3 FY25. This segment targets the enterprise C-suite, the executives. Tools for marketing automation, personalization, customer analytics, big enterprise stuff. In this space, AI aims to deliver hyper-personalized customer experiences, essentially creating a unified content supply chain.
A content supply chain.
Yeah, think of it as seamlessly connecting creative asset creation from the Creative Cloud all the way through to activating that content in marketing campaigns and then analyzing the results.
Connecting the dots.
Exactly. Making marketing more intelligent and efficient at scale.
From what you're saying, AI seems to be far more than just like an add-on feature set. It sounds like a fundamental redefinition of Adobe's entire identity. How profound is this shift, really, from their perspective?
Oh, absolutely. It's not just an add-on. It's existential for them, I think. Management themselves call AI a tectonic shift. Not an incremental feature, but the most significant technological shift and largest market opportunity in decades.
Tectonic shift, that's strong language.
It is. This isn't just about integrating AI. It's a complete re-architecting of how they deliver value. The goal is comprehensive. Infuse AI across the entire portfolio and, crucially, launch entirely new AI-first products designed with AI at their core from day one.
Okay.
And the strategic pivot is leading to a genuine convergence of those 3 clouds into a single, more cohesive ecosystem. We see it with GenStudio and Experience Cloud, which unifies content creation and activation. We see it with Adobe Express, now integrated directly into Acrobat for creating on-brand visuals seamlessly.
Breaking down the silos.
Pretty much. And the catalyst for this profound integration is their common Firefly AI architecture. That acts as the intelligent backbone. This single, commercially safe generative AI engine enables creation, management, personalization, analysis across the entire platform. This convergence is absolutely key. Key to creating higher switching costs for customers and defending against competitors trying to unbundle Adobe's suite, chip away at its interconnected power.
So let's get into the nitty-gritty then. What does this AI infusion actually look like in practice for users? Can you give us some specific examples? How are they bringing AI to life in the products?
Sure. Adobe's strategy here is kind of twofold. Embedding AI into the existing flagship apps, the ones everyone knows, and launching new AI-native services. So in Creative Cloud, for instance, AI is deeply embedded in tools like Photoshop. You've got generative fill, generative expand, text-to-image.
Right, the stuff making waves online.
Exactly, allowing users to create or expand images with simple text prompts. Illustrator now offers text-to-vector graphic and generative recolor, which can drastically speed up design work. And Premiere Pro is getting Firefly video model features, like generative extend, which can intelligently add frames to clips, makes editing potentially much faster, much easier.
And how are they charging for this?
Monetization for these creative tools is through something called generative credits. Higher tier plans like Creative Cloud Pro, they get more credits and access to premium features. And this seems to be driving adoption significantly. In fact, the report says 75% of Photoshop users are already utilizing Firefly features. That's a remarkable uptake for something so new.
75%.
Yeah.
Okay, what about Document Cloud?
Then there's Document Cloud.
Hmm?
This is a more direct monetization play with the new Acrobat AI assistant.
Ah, the
Yeah.
assistant.
Yeah. This is essentially a conversational engine for your documents. It offers instant summaries, Q&A with cited references. It can even generate content like emails or reports directly from the document's information. It works across PDFs, DOCX, PPTX, even meeting transcripts.
So, like, having an intelligent assistant that's read your whole doc?
Pretty much, yeah. Think of it that way.
I mean, it's
And
not-
this is monetized as a low-cost add-on subscription. Initially, it was $4.99 a month, later promoted at $1.99 a month, really targeting those billions of free Acrobat Readers users out there.
Billions. That's a huge potential market.
Massive. And early results show strong traction, with units growing over 40% quarter over quarter in Q3 FY25. It's a very clever way to introduce AI to a huge existing user base and get them paying something.
Okay, and Experience Cloud for the big enterprise folks.
Right. In the Experience Cloud, AI is more about automating complex marketing workflows for enterprises. GenStudio is an AI-powered application for generating on-brand copy and images at scale, complete with built-in compliance checks, which is critical for big companies.
Compliance is key.
Absolutely. They're also introducing AI agents into marketing automation platforms like Journey Optimizer. These agents can automate tasks like identifying high-value buying groups or orchestrating highly personalized customer journeys across different channels.
Making the marketing smarter, basically.
Smarter and more automated. Monetization here is more AI-influenced revenue. These features are designed to increase the platform's efficacy, its ROI, justifying those significant enterprise subscription costs. And it seems to be working. It's driving deeper adoption of the underlying Adobe Experience Platform, AEP, which is their core data engine. That saw a 50% year-over-year subscription revenue growth.
50% growth in the underlying platform. That's significant.
Very significant. It shows the AI features are making the whole enterprise offering stickier and more valuable.
It really sounds like that IP-indemnified, commercially safe Firefly engine is the strategic linchpin for everything, especially when Adobe is trying to win over those big enterprise clients you mentioned. What makes it so strategically important that it keeps coming up as this key advantage?
Well, its strategic importance, frankly, cannot be overstated. The IP indemnification is absolutely critical for large enterprises. As I mentioned, for a major company, using an AI-generated image without that guarantee. It's like playing legal roulette with their brand. It's a non-starter for many.
Too risky.
Way too risky. Adobe is selling not just a creative tool, but a comprehensive risk mitigation and brand safety solution. In a generative AI space still grappling with legal uncertainty, Adobe offers essentially peace of mind. Trust. That's an incredibly powerful selling point. It directly counters a major barrier to widespread enterprise adoption. They're not just selling creativity, they're selling, corporate safety.
So Adobe is integrating AI widely and successfully in many areas, it seems, creating new revenue, shoring up existing streams. But the report still paints this picture of intense competition, a genuine multi-front war. Who are the main players challenging Adobe across these different battlegrounds?
You're right. The landscape has been radically reshaped, as the report puts it. It's not the same playing field anymore. In the UI/UX design space, there's what the report calls the Figma void. We touched on this after that failed acquisition.
The $20 billion one.
Yeah. Adobe effectively conceded the modern collaborative product design market. Figma now clearly dominates. It's becoming the central hub for modern product development. The concern here is that Adobe's powerful applications like Photoshop, Illustrator, they risk being relegated to mere asset factories.
Just tools to feed Figma.
Kind of, yeah.
Right.
Tools used to create components that are then assembled and collaborated on in Figma. This threatens Adobe's historical suite advantage, that lock-in effect, as users gravitate to this new central platform.
Okay, that's a big strategic threat. What else?
Then we have the creator economy clash with Canva. At the lower end of the market, non-professional creators, small businesses, Canva is the undisputed incumbent, valued hugely, billions in revenue. Canva's strength is its incredible user-friendliness, fast templates, seamless collaboration, It makes design accessible.
Very easy to use.
Super easy. Adobe is challenging this with Adobe Express, leveraging Firefly AI and its creative cloud connections. It's showing promising early traction, but it's definitely an uphill battle against a deeply entrenched and, frankly, beloved platform.
And the pure AI generation race.
Right, in the pure generative artistry race, Firefly competes with these AI-native startups. You've got Midjourney, known for its aesthetic quality, sometimes surreal outputs. Stable Diffusion offers unparalleled customization, open-source flexibility. In video, there's OpenAI Sora, aiming for realism, Runway for more cinematic output, Pika Labs focusing on speed and accessibility. It's crowded.
Very crowded.
It is. Adobe's differentiator here isn't necessarily raw model superiority in every single niche. It's that commercially safe guarantee we talked about, plus the deep workflow integration to professional tools and the user-friendliness for its existing mass audience.
The whole package.
They're selling a complete, integrated, safe system, not just an individual model you have to figure out how to use responsibly.
And finally, the enterprise front.
Finally, on the enterprise front, Adobe Experience Cloud faces off against Salesforce Marketing Cloud. That's the big competitor there. Salesforce leverages its market-leading CRM integration, its customer relationship management system, and its Einstein AI for customer data insights. They focus on the journey from a sales and service perspective.
Data-driven marketing.
Very data-driven, CRM-led. Adobe counters with its unparalleled content creation capabilities through Experience Manager and its best-in-class analytics. More content-led, it's a fierce battle. Customer choice often depends on whether their priority is CRM-led marketing or content-led marketing. Distinct philosophies, really.
Okay, so ultimately, in this high-stakes game of adaptation, the real scorecard is often the financials, right? How is Adobe actually performing on the balance sheet amid all these opportunities and threats? What are the numbers saying?
Well, Adobe delivered a strong Q3 FY25 performance that generally surpassed analyst expectations. So operationally, they're executing.
Good.
It offered tangible evidence, as the report says, that the AI strategy is indeed gaining traction. Total revenue hit $5.99 billion. That's a solid 10% year-over-year growth. Non-GAAP EPS, earnings per share, came in at $5.31, marking 14% year-over-year growth. Pretty healthy.
Good gross numbers.
Yeah. Both digital media at $4.46 billion and digital experience at $1.48 billion showed steady growth too. 11% and 9% year-over-year, respectively. And crucially, going back to those AI metrics, the AI-influenced AR exceeding $5 billion and that AI-first AR surpassing its target. Those are strong indicators that AI is truly becoming an accelerating revenue driver for the company. These are concrete results validating their strategic pivot. It suggests their AI bets are starting to significantly move the financial needle.
That sounds overwhelmingly positive. Really strong numbers across the board. But the report also highlights deep market skepticism reflected in its stock valuation. Why the mixed signals? Why isn't the market fully celebrating these wins, seemingly?
This is where the narrative gets really intriguing, right? It's that classic tension between current performance and future perception. Despite that strong operational performance we just outlined, Adobe's stock valuation tells a rather different tale. Its current price-to-earnings, PE ratio, is approximately 22.3x. Now, you have to compare that historically.
Okay.
That's a dramatic compression from its historical 3-year average of 41x and its 5-year average of 43x.
Wow, nearly half.
Yeah, so a big drop. And if you compare that to large-cap software peers, like Microsoft is around 37x, Salesforce about 35x, Adobe's PE is substantially lower. This isn't just a minor dip. It indicates the market is pricing in a significantly lower terminal growth rate for Adobe's future, likely due to those intense competitive threats, the potential commoditization risks we discussed, the Figma gap, Canva, the AI startups.
The market sees the threats.
The market seems to be weighing those threats heavily. While their price earnings to growth, or PEG ratio, is around 0.55, which typically signals an undervalued stock. The report suggests this actually reflects deep market skepticism about the sustainability of that growth rate beyond the immediate forecast.
So good now, but maybe not forever.
That seems to be the market's concern. It's a clear tension between the short-term AI wins and these longer-term disruption fears. The market sees a tightrope walker, like you said, but it's worried about the safety net below.
So we've explored the opportunities, the challenges, the innovations, the financials, that tightrope. If we bring it all together now, what are Adobe's biggest advantages and its most pressing challenges as it continues this profound transformation? Can we summarize that, SWOT?
Yeah, the report's SWOT analysis, strengths, weaknesses, opportunities, threats, provides a great 360-degree view. Let's break it down. For strengths, They've got that deeply entrenched ecosystem, creating high switching costs. It's hard to leave Adobe once you're in deep. They have a powerful, globally recognized brand, a very strong financial profile, over $2.2 billion in operating cash flow just in Q3 FY25. That's a lot of resources. And of course, that differentiating commercially safe Firefly AI strategy we keep coming back to, these are formidable defenses.
Okay, solid strengths, weaknesses.
On the weakness side, there's that clear strategic gap in UI/UX design. The Figma loss really hurts there. There's also a lingering perception of high cost and complexity for their products compared to leaner competitors like Canva or some startups. They're seeing slowing core market growth in some established areas, and maybe a perceived slower pace of innovation compared to these really nimble AI-native startups that can move super fast.
Right, the classic incumbent challenge,
Yeah.
opportunities.
The opportunities are massive, though. Huge AI monetization potential at scale through direct add-ons like the Acrobat Assistant and upsells like Creative Cloud Pro, deeper enterprise penetration with Gen Studio and the whole Experience Cloud Suite, expansion into the prosumer market, kind of bridging professional and consumer with Adobe Express, and the long-term potential of agentic AI that can act autonomously, intelligently to automate really complex workflows. That could be huge down the line.
And finally, the threats.
And finally, the threats. Significant disruption from AI-native startups, potentially leading to commoditization of some creative tasks. That platform shift towards Figma as a central hub, pulling users away from Adobe Suite. Canva's continued dominance in the low-end market, and potential pricing pressure or just general subscription fatigue among users who are being asked to pay more for AI features across many platforms, not just Adobe's.
The investment case for Adobe sounds like a real debate then, a true battle of perspectives based on that SWOT. Can you quickly walk us through the core arguments from both the bull and bear perspectives that emerged from this analysis? What are the two sides saying?
Absolutely. It's a classic debate. The bull case argues that the market is significantly underestimating Adobe's durable advantages, that ecosystem, the brand, the finances, and the tangible success of its AI monetization strategy already. Bulls believe that commercially safe Firefly mode is genuinely robust and will lock in enterprise customers who prioritize IP security above all else. And they'd argue that the current low valuation offers a compelling margin of safety for investors. It's an argument that Adobe's deep integration, its enterprise trust, and its execution will see it through this transition.
Okay, that's the optimistic view, the bear case.
The bear case counters pretty strongly. They argue that the Figma loss is a permanent strategic impairment to Adobe's product portfolio, like a wound that won't fully heal, representing a missed future. Bears argue that AI will ultimately commoditize Adobe's core creative tools, making them less valuable over time. They might say the current monetization strategy, the credits, the low-cost assistant, is flawed or insufficient to really drive massive new growth. And fundamentally, they argue that as a large incumbent, Adobe faces the classic innovator's dilemma, being too slow, too bureaucratic, or too weighed down by legacy to adapt quickly enough to this rapidly changing AI-first landscape.
So, if we're trying to resolve this tension, if we're watching the story unfold as observers or investors, what are the key things we should be monitoring? What signals should we look for to see how this all plays out over the next few quarters and years?
Yeah, to truly understand how this story unfolds, there are several key catalysts and indicators to watch closely. First, keep a sharp eye on Adobe's quarterly earnings reports. Specifically, look at the growth trajectory of digital media ARR and, crucially, that AI-first ARR number. Any re-acceleration in the main digital media ARR driven by AI adoption would be a huge positive signal. Also watch the adoption metrics for the Acrobat AI Assistant and Creative Cloud Pro. Are people signing up?
The adoption numbers matter.
They really do. Second, pay close attention to the Adobe Max conference, usually in October. That's their big annual showcase. We should watch for new Firefly video model developments, deeper cross-cloud integrations like we talked about, and any clearer strategy they might articulate for directly competing in that collaborative design space against Figma. Do they have an answer?
Okay, Max is key. What else?
Third, monitor competitor actions. Things like a potential Canva IPO that would set a huge market benchmark, or significant funding rounds for AI competitors like Midjourney or Runway. These external events can heavily influence investor sentiment towards Adobe.
Market context.
Exactly. And finally, look for major enterprise customer announcements, public declarations of large, well-known companies adopting Firefly, Gen Studio, and the Experience Cloud platform at scale. That would powerfully validate Adobe's enterprise strategy and their whole safe AI bet, real-world proof.
We've taken a deep dive today into Adobe's ambitious and maybe perilous navigation of the AI landscape. We've explored its significant opportunities with its IP-indemnified Firefly platform and its Pretty stark strategic challenges from formidable competitors on multiple fronts. It's a fascinating story, really, of an established leader trying to reinvent itself in real time, infusing intelligence into the very fabric of creativity and digital work. And ultimately, Adobe's journey feels like a microcosm of the entire software industry right now, doesn't it? Can an incumbent truly transform and stay at the cutting edge, or will this AI gauntlet prove too challenging, too fast, even for the most entrenched players? What does this mean for the future of creativity and digital work as we know it? When AI becomes not just a tool, but maybe the very operating system, what aspects of this transformation do you find most compelling or maybe most concerning? And what company do you think is next to face such a profound tectonic shift? Lots to think about there.